Welcome to the channel. My name is Jodie Knight. You can find me over on eToro. My live portfolio there is going to be linked in the description down below. But other than that, in this video, we're going to talk about the daily chart, the weekly chart, the short and long-term, long-dated options interest. We'll talk a little bit about my price targets, where I'm going to add, where I'm going to trim. As well as that, we'll look at the general market, what data came out, what data is coming out, and if there's any good Tesla news that we're interested in. Let's just jump straight into it. Straight away, the chart, we can see we had the pretty strong resistance at this level at 270. We talked after earnings about this huge gap being a bit of a worry. Tesla does have a very strong history of filling its gaps. So, we're definitely on the way down to filling this. I think if Kamala wins the election, then we will fill this gap, no problem. And that's definitely another buying opportunity, potentially slip even more lower. I think they will try to go after Elon, but we'll have to wait and see. Obviously, a Trump victory is probably going to pump this one. They're kind of in bed together, kind of married, so they've both got to succeed or they're both going down. But price support to the downside, this bull market band has flipped quite bearish, so that's not going to offer very good support. If we drop into this air gap here, the next level of support is going to be this kind of 220 area. And then below then we do have quite a lot of support confluence. That's held us up quite nicely when we dipped down here before. And if that blows, then we're back down to the kind of $200 area. I wouldn't expect us to go below 200 again. The underlying fundamentals of the company have turned a corner, but again, that depends. If Kamala wins, there could be some legislation that is not that supportive to Tesla coming, but depends how aggressive they want to be in that. I definitely see them going after X, and that there could be some kind of contagion there, not necessarily from a fundamental point of view, but more a sentiment kind of point of view. The RSI is kind of leaning to a neutral tilt on this one. We did get a bunch of overbought tickers, so it makes sense why we pulled back on that anyway. Just the pullback's been a bit more aggressive than maybe it would have been if the elections weren't this week. There is also the Fed rate decision. I'm expecting a small cut again, but again, I think that could change depending on who gets voted in and what the Fed's going to have to look at the policies that each party wants to bring in and decide whether they want to kind of put the brakes on a little bit, because some of the policies are quite expansionary. We could see a little bit of an uptick in some situations, but it will take a while for that to bleed into the system. My targets for Tesla, I didn't really amend my models too much. The 10-10 event and earnings didn't give us too much data to update things with timelines and prices. So I think still we are sitting between $300 to $500 over the next few years. A lot of the new products are pegged for 2025 launch. Now, I don't think they'll be kind of hitting the bottom line until 2026, but that said, there might be some front running leading up to that time when the stocks start to get repriced. I do think the last earnings tilted Wall Street into thinking maybe they need to start projecting more growth into the stock. I know those prices seem high for everyone, especially people that are still pricing this as a car company, but they really need to account for earnings growth coming on this one. A good way to look at it would be Nvidia before the AI craze started catching on. That stock could have been considered expensive by many other metrics, especially compared to its peers, but earnings really have just driven that one higher. What else did I want to talk about? I'm still going to be happy buyer of anything under 350 on this one. I would like to buy more down at the kind of low 300 area, low 200 area. 210 area I'd like to buy more in. Next upside support is going to be, again, we've got this Fibonacci level at 254 is going to be in play, then 270 again. I would expect us to break on the next 1-3, but it really depends on the move up to it. If we're kind of chopping around up to it and then break over and back test, that'd be super good. But a strong move to it's probably going to hit a bit of hesitation on that one. We still have yet to complete the measured move at kind of 300, so we're definitely going to get a short-term top at that one when it gets there. Weekly, though, Got a lot of measured moves in play here. I think these are going to hit next year, to be honest. Latest will be 2026. But the RSI here is kind of neutral, could go either way. The flow looks good. It's bullish, but not overly so. There's definitely room there. Also room to the downside. So looking quite neutral. MACDX plus the golden cross, again, it's got room to the upside and room to the downside. So neutral on the longer time frame. We just need to have a decisive move and pick a direction on this one. But the elections and the FOMC meeting are going to be really important to this stock. Looking at the open options interest for Tesla, I'm actually really surprised on this one. Actually, we've got a key strike area at 260, which makes sense. Kind of lines up with this old high here. But really not a whole lot of negative sentiment. Yes, we've got some strikes down at 200, but compared to the volume we're seeing on the bullish side, maybe the market's priced in more of a Trump victory. I don't know. The expected move is quite large, so I don't know, guys. Things are looking good. I don't want to say it too early, but I've been expecting a Trump win. There's been a few Harris shakeups, but maybe I was right with my initial expectation. But I guess we'll find out in a few days or not. But either way, your portfolio should be positioned in a fairly neutral or at least flexible kind of way. A week out though, seeing a bit more to the downside. So this would be kind of what I would be expecting to see in the market this week. I don't know why it's a week out, but maybe people just wanted to give themselves a bit more time for price action to shake out. So definitely a lot of people thinking that gap fill is a strong candidate. A lot of people sitting in the money already on this one, so they'll be happy. Why they wouldn't have taken money off the table right now, I don't know. So we'll see. A bit weird in the options market for the next few weeks for Tesla, but let's just push it out to January 25 because that's probably going to give us a better picture a few months out. We do have a lot of interest down here for downside. A lot of people looking at 300 for the upside. A lot of people sitting in the money on this one as well. So kind of within a few months, people are still looking a bit indecisive on this one. The expected move is quite large on this one again. We do have some strikes right up here, kind of 400, 500. So the people that are bullish are very bullish, and the people that are bearish are a little bit bearish. So let's put it out to 2026, though, where I'm thinking most of the action will be. Okay. Looks like a fair chunk of the market agrees that's where a lot of the action is going to be. See if we're going to be Tesla's sink or swim moment. We've got a lot of downside interest on that. But I expect as each quarter comes out and Tesla really starts driving things home into a more conducive macro environment, that people might start shifting their focus on this one and really start looking at these highest price targets. So we should see a lot of these shorts fade, but I mean they might leave them open towards the end of 2026, thinking that they're dead money anyway. Options just turn to dust after a certain time, but we'll see. Not too much exciting news for Tesla. I did want to remind everyone that I do have a earnings breakdown on my website, thecraftytrader.com, for the last earnings Q3 that was. So that's live on there. You can access that for free. Check out my thoughts on it. Other than that, Tesla increases wages in the Germany Gigafactory by 4%. Excellent news for them. At a time when most of the other companies are cutting big chunks of their workforce and closing down production lines. It's pretty impressive. As well, Herbert Ong, if you're a Tesla bull and you don't follow him, I suggest you do so over on X immediately. Such great content. He just put a post on there saying the Model Y outsells gas cars. Can't argue with it. The Model Y in California sales is just booming, whilst Volkswagen plunges 64%. Plants closed, job cuts. So kind of what we were saying when we talked about the Tesla increases just then for the German Gigafactory staff. To that point, I just wanted to show you a little bit of a comparison to a couple of other car companies. A lot of people hate on Tesla. Tesla's going to zero, but they don't actually look at the financial statements. They don't look at the earnings data. They just kind of go on their gut feeling, oh, I don't like Elon, it means the company's going to die. Look at these cash piles that compared to other legacy car companies, they're sitting on, what was it? I did write it down here. About 33 billion cash on hand with hardly any debt. Well, there's very few other legacy car companies that have cash that's even close to being higher than debt. I think Stellantis does actually. I think they have good margins and good return on invested capital as well. It's just, again, cash flow has been dropping for them. So cash flow for a lot of the legacy car companies is a big issue. Toyota, again, I think they have good margin, but they have a whopper debt pile. It's about 1/3 of its enterprise value, which is incredibly high. Honda also has a good cash pile, not much lower than its debt, but still flow has been terrible since 2022. So something to bear in mind. If you're gonna diss on Tesla, you really should look at what the other car companies are doing and compare it to what you would class its peers. It looks even more obvious when you compare Tesla to some of the other EV companies out there. So just bear that in mind. Don't just go on what you feel about a company, actually look at what it's doing there. Moving on to the macro data. Monday, again, there wasn't really much interesting to talk about. We had the factory orders month over month. They're kind of as forecast, so nothing exciting there. Today, we have the balance of trade. It's not going to be super exciting. I guess they're looking for a bit of an expansion on the gap again. Redbook year over year, wouldn't expect anything dramatic from there at the moment. We do have a lot of services data, so I'll be keen to see that. I think the election stuff's probably going to overwrite a lot of what happens in the market today, but we'll see. The global composite as well. I mean, everything forecast-wise looks like they're kind of expecting things to be kind of, stable, flat, so we'll keep an eye on that. But really, the most important thing today is going to be the election. How we might see some states reporting in. I'm not sure. The US does it super weird. It takes like days for the states to confirm. And then tomorrow, nothing really exciting. We've got more mortgage data. That's probably going to not be great as well with bonds and stuff. It's just not great. Yeah, not much exciting until the FOMC decision. And I think to be comfortable with my predictions on that, I need to know who's going to win the presidency, because they've both got quite different policies, which will, I think, affect what the Fed decides to do. So we'll have to wait and see on that one. That's a wrap. If you enjoyed this content, give the video a like, share with your mum, your nan, your dad, your gran, whoever, and subscribe to the channel, and I'll see you tomorrow for the next update.